Good afternoon. Welcome to our think tank briefing, redefining business and society with limitless connectivity. It's a bit of a mouthful, but if you're joining us online, welcome. And to those of you here in person, thank you for joining us for lunch. I'm Mark Millian, Managing Editor of U.S. Technology for Bloomberg. Today we'll explore a bunch of interesting things, in particular how the extension of connectivity across ecosystems is enabling an entirely new way for business and society that is hopefully healthier and more inclusive. We have a fantastic lineup of senior business and technology leaders to share their insights on how connectivity is changing their industries and the way they serve their customers. Before we get started, a couple of announcements. First, I would like to acknowledge the sponsor of the special think tank briefing, Ericsson. So thank you to Ericsson. If you are joining virtually and run into any technical issues, please use the chat box to the right side of the video window for support. You can also engage with other virtual event attendees there. And we would like to hear from you, and that includes people in the room. To submit questions virtually, please click open the white tab on the right side of the video window. And for those of you in the room with us, you can submit questions by scanning the QR code on the table cards, or that should do it. You can also engage with us on social media using the hashtag BloombergTech. And with that, let's get started. Please joining me in welcoming Mastercard CEO Michael Miebach to the stage for our keynote interview. Thank you, Michael. Michael, thank you for being here. And I want to start with some tech news from this week, which is that Apple finally confirmed some Bloomberg reporting from a year ago and said it's getting into the buy now, pay later space. And they're doing that with Mastercard. How did this project come about?
Well, so buy now, pay later, let me start a little bit broader. Been around for a long time. We're talking decades, so it's nothing particularly new, but it's a space that got a lot of momentum over the last couple of years.
When you say decades, you're referring back to like layaway at Woolworths?
Brazil, Turkey,
okay.
It's been around.
Mm-hmm.
So it's been out there, but it has never really scaled globally. So pure plays come along, we all know the names, and it's a good experience, and particularly younger people like it. So we as a payment company, we said, I mean, if card is the answer to everything, then we're clearly missing the point. There's different types of payment options, and we've said this strategy long ago said whatever is out there that's relevant, we will offer it because we believe in choice in payments. So what we did, and I will find my way to Apple because this is the starting point. We created Mastercard Installments, announced in September last year, and said we're going to build it into the network. So basically, at 90 million acceptance points globally, it will be available, which is a very different ballgame than if you are in a bilateral buy now, pay later kind of business model. And that's the path that we can bring. So what Apple announced on Monday this week at their Worldwide Developer Conference is basically they're going to join. They're going to start, or they will launch Apple Pay Later, but it will be on the basis of Mastercard Installment Program. So who's on there today with us? Who are our starting partners before Apple joined? It's a Barclays, it's a Synchrony, it's an American Airlines, it's a Saks, it's a Cabela's, et cetera, and it's going to be international. So that's the Mastercard piece, and they joined, and we're obviously excited about that. That's how it came about.
We've been very interested in Apple's move into finance broadly, with the Apple Card, et cetera. One thing we had heard from some of the people at Goldman Sachs is that Apple isn't exactly the easiest company to work with. Mm-hmm. They want things done exactly their way, and they generally don't want to share the credit. What made you want to get into bed with Apple on this?
See, we're a network. So we connect buyers and sellers and banks and fintechs. In the end, we're B2B2C. And we'd like to work with people that drive a good consumer experience. In many countries, banks have a lot of trust with consumers. They provide a good experience. So we partner with banks. We partner with fintechs, small and big. This is a particularly big fintech. And with the rise of Apple Pay, many, many years ago, I think 10 years ago, whenever that ecosystem was created, it really drove the secular shift from cash and checks into electronic payments. So we will partner. Of course, we will partner. But in the end, our network is open for anybody. So we partner with other large tech firms just as much as with the smallest fintech. So
I think there's a little bit of discomfort out there about buy now, pay later. How popular it's gotten among a certain demographic, as you mentioned, and how it makes debt almost a little too easy to accumulate. It's almost seen, I think, like an e-cigarette for the credit industry, like a way to hook a new generation on debt. How do you think about BNPL?
Well, first of all, as I said earlier on, it's another way to pay. You can pay from a bank account. You can pay with a card, debit card, credit card. You can do a loan. Old consumer finance business, it was a particular way of buy now, pay later. Now is at point of sale. Buy now, pay later is a bunch of different flavors. Oftentimes, it's within an existing credit line. So overextension of credit is always a concern. But if it's within an existing credit relationship that somebody has with their lender, then that's not fundamentally a concern. I think what one has to watch is if somebody takes a buy now, pay later loan and it's funded with other debt and it is not generally clear on how it all ladders up, and are consumers at the risk of overextending themselves, that is something to watch out for. We've always advocated for responsible lending. So when we engage with lenders around the world, we're obviously not the lender. And we say, hey, responsible lending rules, got to keep that in mind. We enforce that in our network standards.
So let's shift a little bit. The pandemic has changed a lot of things. One of the newer habits I've seen develop is an embrace of mobile payments, tapping your phone against a cash register that didn't seem to be there before. You actually go into places now to pick up a falafel or whatever, and stores that once had signs saying cash preferred now have these signs that say contactless payments preferred.
I love it.
How has that changed things for your business?
It changed a lot, and it's not like the flavor of the month. If we look over the last 2 years, where people didn't have the choice on how they're going to pay because cash was not a thing because you were at home, so you needed to do something digital. These habits are staying. We've just done a whole new set of research globally, 40 markets, people 18 above, and we asked the question, what did you do before? What are you doing now? 85% of people have used at least one emerging payment solution in the past year, out of all the people that we surveyed globally. That could be mobile money via SMS, it could be click to pay, it could be buy now, pay later, it could be any one of those. And 93% of people that we surveyed said we will definitely use more of that going forward. So stuff is sticking. We see it in the numbers as well. When we look at our data, was a lot of shift to online spend. Now that people go back into stores, it's rebalancing. That's true. But the online spend is remaining at an elevated level. So that is fundamentally changing. Habits are changing. More choices are available because consumers are saying this stuff works for me. And buy now, pay later comes just about at that time, as we just talked about it. So 81% of people that we surveyed globally are saying they have heard about buy now, pay later already. Think about that. So it is top of mind. It's an astoundingly large number, but the research shows it very clearly.
Zooming out for a minute, there's a lot of anxiety about the economy. As we've talked about at this very conference, tech stocks are way down this year. Venture capitalists don't know what to do with their money. Interest rates, inflation, gas prices, et cetera. When you look at Mastercard's business and how people are going out into the world and spending their money or not spending their money, as it were, what are you seeing?
Yeah, so the state of the economy, spending patterns and all of that is, the big headline for me is really the outstanding resilience of the consumer. We're not just talking the US consumer. We're talking the consumer in Europe. We're talking in Asia, where the rebound hasn't even happened yet. So people have had the benefit of just savings rate. There wasn't much that you were able to do, and now you are able to do more. You can go and travel. You can go and spend on this, that, and the other. So what we're seeing is strong spending. Yes, when you talk to an economist, they look forward and they think about questions of recession, stagflation, and so forth. We're not seeing it in the numbers at this point in time. You just take a data point. May over year, May 10.5% above on US retail spend versus last year. Next thing that we're also seeing is, while the consumer spending continues to be very strong, what you're also seeing is a true rebalancing in what people spend on. So what do you spend on the last 2 years? You go to a home improvement shop, and then you're going to fix your house, so you do something because you can't go anywhere. Now it's all into services. It's restaurants, it's cinemas, it's go watch a ball game. We just see these categories changing. And it's not the full potential that's coming through yet, because you got labor adjustments. That requires a different set of labor, versus people that were working in stores before. So all of that recalibration and then supply chain issues that are associated with that, that's kind of rebalancing as we speak. But the consumer finds different way to spend on, and they keep doing that. And the third point that I want to talk about, which is really coming through very strikingly in the numbers, is travel. People want to make this summer the summer because they missed out on the last 2 summers. We're going to go somewhere. Booking rates are incredibly encouraging, 25% above 2019 levels in terms of booking rates. We're expecting 1.5 billion people more to travel this year than last year. So that's generally a positive picture. I don't have a crystal ball what we're going to see going ahead, and we got to ask an economist. But for now, that's pretty encouraging.
You want to wager any bets on whether we're entering
No.
a recession? No. Okay. Mastercard has been dabbling a bit in crypto.
Dabbling?
Dabbling?
It's not a word I would choose.
Not dabbling? No, you're all in? You're putting all your chips on the table?
I did not say
Crypto
that
is
either.
obviously having a tough time right now, keeping
right,
prices afloat. So if you're not dabbling, what is your perspective on crypto right now?
So earlier on, when we talked about buy now, pay later, why is it relevant to us? Because it's another way to pay. It's a choice. Crypto could be another way to pay. It's interesting technology. It brings in trust of parties that don't know each other. So we have been investing. We have a lot of IP in this space. And we were scratching our head on what problem will it solve and when will it solve it. Use cases that you're starting to look for. Why would you solve something that's already solved? Everyday payments in a store, that is certainly not our starting point. But a question on, could you make cross-border payment more efficient? Possibly you can. So we're leaning in where we think there's an opportunity where our customers are looking for help. We partner there. And we play in 3 ways. First of all, it's a reality that a lot of people want to invest in crypto assets, and they want to sell crypto assets, and they trade in and out. And that should be as easy as possible with your Mastercard. So we do that, and we do this with partnerships, with a Gemini, with a bunch of Circle, Coinbase, whatever. An extension of that, you're buying a digital good, is NFTs. So we have a partnership there with Coinbase on that point as well. So you want to buy an NFT. If you ever tried this by yourself, then it's not that easy. But going forward, it will be quite easy as we roll this out with Coinbase. So that's the in and out. Then there is a massive ecosystem. There's a lot of companies in the crypto space that try to find out what is a good use case. They all have a few set of common issues that we can help with. And that is a question of digital identity. Who is at either side of the transaction? That question doesn't go away, not even in the world of crypto. Another one is compliance rules. There are compliance rules that do exist, but how do you keep track of them? So we made a bunch of acquisitions in the space, and we have a crypto as services part of our business that helps the ecosystem to figure out what the technology in the end can do, but we can backstop that and help with that set of services. And then there is, as you look forward, at any given point in time, there's a government that is thinking about a central bank digital currency. There might be some private sector stable coins. So let's assume at some point in time, these stable coins will happen. And then you've got to ask the question, well, should that be then flowing through our veins, our system in Mastercard as a settlement currency alongside the euro or the dollar? Absolutely yes. We're technically ready to do that. And at this point in time, we're just engaging with governments who are thinking about this, help them make the right design choices. So that's the approach. We want to play, we want to lean in because it's relevant technology. And if I want to be a good partner to any one of my customers, I got to be there in crypto as well. That's why we have a lot of IP and people that know about that.
We are very, very short on time, but we do have a question from the audience. I
Right.
want to sneak in really quickly, and I think I'm going to shorten it so that we can make it a really short answer. What are the most exciting trends in fintech, security, and cybersecurity you see at Mastercard? I'm going to change it to what is the most exciting trend?
What is the most exciting trend?
In security.
Biometrics.
Biometrics. Good answer.
Biometrics. Pay with your smile. There you go.
Love it. All right. Thank you very much, Michael. This was a great conversation.
That was short and sweet. Thank you, everybody.
Thank you. I will turn the stage over to my colleague Sarah Fryer for a conversation on the business and social outcomes of the new connected world.
Thank you, Mark. Come on up, everyone. Thank you so much, everyone, for being here today. That was a fascinating conversation by Mark and Michael. Here we have, just want to make sure I don't get their titles wrong. We have Harmeet Singh, who is the Executive Vice President and Chief Financial Officer at Levi Strauss Co. We have Jan Soderstrom. Also, thank you for Ericsson sponsoring this. He is the Vice President of Advanced Technology at Ericsson. And then we have Janet Lee, who is Chief Information Officer and Chief Digital Officer at Chevron Shipping Company. So a lot of different perspectives here. We've had fascinating conversations so far. And the hope is that this panel will allow us to talk about the connected world and the investments we make and the changes it makes in our business, the transformation that's possible, and how we think about that kind of connectivity in this environment. So I'll start by asking each of you, what does it mean to your business when you think about that? When you think about the possibilities with this kind of connected technology, how does that affect how you do your job and just bring everyone here into your world? And we'll start with you, Harmeet.
Sure. So hi guys. I'm sure you're familiar with our brands. If not, we'll get to that soon. But to the question of connection, I think for a company like ours that's been around for 169 years, this is critical to our future. Let's start with that. It's the way consumers shop today. They have they want a digital experience. They want to pay digitally. It's how our internal employees, want to work. Especially the millennials and the Gen Zs, and our other stakeholders. There's also ESG is important to us. It's important to drive sustainable practices across, and so for us, it's both push from the top as well as need from the bottom, and it really starts with that. We've added technology expertise at the board level. The CEO, talks about this. I talk about it. The CIO reports into me. For the last 15 years, I've had the CIO report into me. It allows me, as the CFO, to help allocate resources across the board. And I think the pandemic has made a huge difference. It's accelerated digital transformation in a big way, and has allowed us to differentiate ourselves and compete a lot better. I think, my friends will talk about it, but ensuring we're investing in technology just not because it's the latest shiny object, but because it is connected to your strategy and drives an outcome is critical. And I think, the C-suite plays a big role in ensuring that happens.
Yeah.
Well, that's a great question. And the first reflection I have is COVID. Thank God that didn't happen 15 years ago. Where would we have been? The
Right.
connectivity enabled us to, I think all of us, to actually continue. over 80% of Ericsson folks went home that day, and we kept everything going. Didn't miss many deliveries, and innovation continued, right? So it's like it has really enabled business continuity in all sorts of ways. Another example from our home turf is manufacturing. We are building our newest factory, have built our newest factory here in US, in Texas, and all connected with 5G to have these robots and these actuators in everything and sensors connected over 5G and automated with AI, meaning that we can onshore. All of a sudden, we can have production in US at a good economy, right? Because automation, and we can onshore. This is the first time actually since 2G days that anybody has volume radio production in US because of these technology enablements, right? So those are two things, and the last thing, which is maybe closest to my heart, is sort of what innovation we can do on top of what we already have, and then we're coming into kind of metaverse. I mean, my pet project at our lab here in Santa Clara is to enable virtual reality and augmented reality with very lightweight glasses and having all the processing in the cloud. But then, of course, you have to have very, very efficient network, low latency network, because when you move your head, the picture has to come, well, information has to go to...
People get sick.
Yeah, you don't want to get sick, and it has to go there, you have to render the picture, it has to go back within 20 milliseconds or so. And that's the state of the art now. We are doing that every day with different partners in the lab. That's just one example on how connectivity changes other industries and enables completely new use cases that we didn't even think about a few years ago.
Okay.
Yeah, so our connectivity journey really is so closely intertwined and driven by Chevron's overall, core mission to provide more affordable, reliable, and ever cleaner energy solutions around the world. We're a 140-year-old company where we have a long-standing history of innovation and technology, because if you think about where we're located, right, we operate in locations and a variety of geographies that are often remote, that are undeveloped, where there's no technology infrastructure whatsoever. And so some examples of those places are things like our deep water wells offshore in Nigeria or the Gulf of Mexico, the Permian Basin in Midland, Texas, and for me specifically, it's our ships that sail around the world across our oceans. And so in order for us to do and execute on our value chain, to be able to explore, produce, transport, as well as refine our energy products, we've had to really invest in connectivity and lean into emerging technology in order to operate both reliably and safely.
Take us behind the scenes of a Chevron ship. Like, how's the ship been changed, in the last few years to have that connectivity so that it can be more efficient, so that you can deal with some of the pressures of the supply chain? What's different now?
So it's a really fascinating business if you kind of think about what the maritime industry is like. We all take for granted what it's like to work in an office or what we call a shore-based environment. You can't really emulate that type of technology environment on a ship. As Jan mentioned, right, sometimes we have issues of latency, we have bandwidth issues, and sometimes there are just basic coverage issues. But in spite of that, right, we're continuing to optimize the network that we do utilize, and we're still trying to take advantage of emerging technologies. The advancement in connectivity, as most of us know, has really driven a convergence between information technology and operational technology. That's allowed us to influence physical operational assets more than we've ever had before. And so as a consequence, we're able to take advantage of things like real-time monitoring. We're able to automate critical processes more strategically. And we're also able to...
Take us behind the scenes of what that is.
Yeah.
You're talking about like the actual mechanics of the ship. You're talking about the...
Right. So I guess a good example would be one of the programs that we're maturing and developing is something we call the connected vessel. We're able to take data from various systems across our ship from various pieces of equipment, things like our diesel engines, things like our power generators, our propellers. And having access and visibility to that information really guides us in terms of some of the decisions we made around operational efficiency, cost efficiency, how we do our inventory on our ships. But also, I think more importantly, it's also allowed us to be able to understand and view fuel consumption. It's allowed us to understand how we manage our speeds, as well as even do things like anticipate congestion at ports and berths, so that as we understand those various factors, it allows us to actually have a lower carbon footprint in addition to being able to operate more efficiently.
So interesting for me. You also work in an industry that is historical, right? Apparel, like maritime, you work in a shore-based environment, we should say. And what has been some of the growing pains of moving your organization culturally in that direction?
Sure. It's taking some of the older habits that you've grown up with and converting them to new habits. Okay, so let me give you an example. So the jean I'm wearing, this is probably a lot darker when it's first created. And so Harmeet wants something that's a little bit more faded. Sarah may want something which has what we call holes of distress. So what is the traditional way of doing this? And this industry has done it for years. Till we came and pioneered a new technology. So, and most of our manufacturers is overseas. So you'd have folks who take some sandpaper and they'd fade the jean. Or you'd have folks who create the holes of distress. So what we said is, okay, now that requires chemicals, not good for you. And it takes a lot longer. And in this industry, you've got to think of trends a year later. So, we're making stuff already a year down the road because our designers are thinking through, okay, what is going to sell a year later? So what we came up with is using lasers with algorithms that are designed, my IT team helped, design some algorithms. So what we did was we said, okay, if it's darker and you want to fade this, can you use a laser machine to fade it? If you had to distress it, could the laser do it for you? But the idea was, let's reduce, potassium permanganate, which is not good for you. That's how the idea came across. And so we started with that. We researched it. We came up with an algorithm that could do it. So if Sarah wants to have a different kind of a look and feel, she can go and say on an iPad, this is what I like. That is fed through an algorithm into the laser machine, and the product is this happens now in 90 seconds versus 20 minutes. And what we can do is, rather than think about a year ahead, we bring the blanks into our DCs now in the US. And if there's a trend that's happening, we're able to quickly react to the trend and create those machines. The other good thing about it is when we started doing this, is we opened it to the consumers, and consumers want to design or customize their own product. And suddenly, using the data, we realized people are trending towards a certain style. And said, okay, that is the style. Okay, so let's start gravitating to it. So that needed a cultural transformation. Our designers are not used to this. Our manufacturers are not used to it. So we had actually spent 6 to 9 months bringing people across and saying, okay, folks, this is a new way of doing things. This is the benefit, okay? And got people across the board, but it had to start at the top. You had to invest in laser machines, and then you had to take a period of time to convert, our customers, that large retailers, our vendors overseas, et cetera, et cetera. So it actually is a major change, and culturally takes a long time.
And then you don't have to have people working in close proximity during a pandemic, which, Jan, you mentioned that has been so critical for this last 2 years, to have this connectivity, to have these processes in place. I've heard executives say to me that the world has transformed maybe 5 years faster than it would have because of the pandemic. I don't know if you agree with that, Jan. Do you feel like we've accelerated in adoption of new connectivity, or does that mean there's a slowdown ahead, or does that mean that people will continue to accelerate their adoption of such technology?
Well, it certainly helped a lot these 2 years in terms of adoption of everything from Zoom to Teams to working remotely and mobile, all of that. So most of that will stay, and most of that maturity will, of course, continue to push ahead. And we are investing ourselves, of course. We are sort of the producer of connectivity. That's our main business. And then we are, of course, a consumer of connectivity as well, so to drive our own innovation within our own business. So as a producer of connectivity, we see that the speed of the need for more and more and faster rollouts of technology is increasing all the time. 5G is rolled out much faster than 4G was, 4G much faster than 3G was. That's of course good for business, and we kept investing in our techno leadership to take advantage of that. But we also made use of that technology in our own operations, right? So, for example, in our managed services, going from a very manual-driven operations to much more AI and automated, and having connection points everywhere in our installations made our efficiency go up tremendously. So I think that is seen throughout all businesses. What you're telling here is telling the same story. I must just I must just comment here. Okay. 179 years, 140 years, 146 years. This is an amazing panel of companies that have innovated themselves throughout the generations. I think it's pretty cool, and that's also sort of the big transition now. Every industry will have to do exactly this now in this digitization journey. So it's a very cool experience.
I'm curious, and what our table mate brought this up as we were just chatting before this panel. As you look at the market right now, as you look at the way equities are trending, the way people are worried about inflation, they're worried about the supply chain, how do you still make those choices to invest in the future? What is the most important place to put your money right now, and how do you balance it against those pressures of growing the business as it is? Maybe this is a good question for a CFO to tackle first, but actually.
Sure. No, it's a great question. We had our investor day last week in New York, and we laid out 5-year targets with strategies, because you have to think long term. First, you've got to think long term. Don't worry about. You have to worry about the next quarter, but think long term. I'd say the way we think about allocating resources, whether it's capital or people, it's about, okay, what's the outcome you're trying to drive? But it's also about agility. One of the things that has really made a difference during the pandemic for us is, being an organization that's been around for a long time, we should take our time to get things done. We should come up with an idea, test it, make it perfect, then test it further, and then launch it. It should take us a year or 2 years. But I think the pandemic changed a lot. My phrase is, let perfection not be the enemy of good. And if you're starting from scratch, that's in your DNA. If you've been here for a long time, you want to be perfect. And so what we have tried to do now, whether as we've launched shipping from store, we're not relying on the DCs, or you can buy online and pick up in the store. Those things would take us a year or 2, to line all the pipes and get everything perfect and make sure. Now we can do it a lot faster. So I think agility is something that we've incorporated in our DNA. A lot of folks, I'm sure folks here have made that difference. But what I would say is, if you have to allocate capital and resources, think longer term and drive outcomes faster. I think that's the big one. We just talked about it in our investor day. We've got 5-year targets, okay, and I think our view is we'll get there.
And Janet, there was another component to this, which was you want to think about the even bigger picture than your company. You want to think about the environment. You want to think about governance. You want to think about adopting technology in a way that that is sustainable. How does Chevron's transformation in that sense dovetail with your tech adoption? You talked about emissions because you can track shipping in a more efficient way and fuel efficiency. How do you invest in that going forward?
So I actually think it's quite complementary. One of the commitments that our CEO made to our shareholders, and it's a strategy we have, is lower carbon, higher returns. And so operational efficiency, right? How we operate in a manner that really prevents loss of production, that keeps keeps us producing, as well as some of the technologies that we're utilizing to really drive that lower carbon sort of initiative. Those are things that are now so embedded in the work that we do, and similar to what Harmeet said, right? We have a lot of capital discipline where any investment really has to have a clear business value, and it has to align with our strategies, and it has to be something that really supports what we do as an energy company. And so if you think about our remit, right, as a company, economies, they want more affordable fuel, right, and energy. Countries want more reliable energy. Society wants cleaner energy. And so if we're looking at Chevron Shipping, for example, as we are trying to operate more efficiently and in a more lower carbon manner, some of the, I think, consequences that address some of the broader issues are things like the reduction in transportation costs. They are things like lower CO2 emissions, right? So it's really as straightforward as that sounds, trying to align to our strategy, and the tactical things we do within our organizations are just very complementary.
I'm going to pivot to questions here. Thank you all for your questions. How are edge technologies being leveraged to balance cloud compute power and latency? This may be a good question for you, Jan.
Yeah. Well, there are two things with edge, right? Either you want to move things from your central cloud to the edge, or you want to move things from your device to the edge or into the cloud. What I talked about VR and processing is about the latter, right? Offloading things from the device so you can do more. But it can be that you cannot have everything centralized also to move things out, so you have lower latency from the user to the actual processing of whatever it is, the inference of your AI engine or whatnot out in the regions. So edge is super important, but to me, edge is like it's one of the component. Edge plus connectivity is sort of one thing together, right? If you don't have low latency over the network, it doesn't help with edge. So you need to do both.
And in the middle of the ocean, how do you solve that issue?
Yeah, so we sometimes joke that, of our owned and operated ships, we have 30 floating data centers, right? But we have been also exploring technology that allows us to sync when we are close enough to a network and we're not experiencing some of that network connectivity distress. We have a way to make sure that the information, right, continues to flow. So we also, as Jan mentioned, use a balance of both.
Well, really interesting thoughts from all three of you on balancing the future and the now, helping your organizations change and get more efficient, more impactful. So thank you so much for spending time with us here. And now I'm going to turn it back to Mark Millian, who was our host earlier, and he's going to wrap it up here.
Thanks. All right, that was a great conversation. Thank you to the panelists and to Sarah and to all of you here in the room and online. That brings us to the end of this think tank briefing. We hope you enjoyed these conversations. Thank you all for joining us. And thank you to the sponsor of this special think tank briefing, Ericsson, for making this session possible. If you'd like more information from our sponsor, Ericsson, please visit bloomberglive.com. Go to Bloomberg Technology Summit and visit the resources tab on your screen. We invite all of you in the room to head back up to the 11th floor for the afternoon portion of the Bloomberg Technology Summit, featuring conversations on supply chains, crypto, autonomous driving, and much more. The program will start back up at 1:40 p.m. Thank you, everybody.